What a difference a week can make. September's a bad month, a horrible month. The market's going to get killed in September. Wrong. Right back up, rallying every day this week. A little bit lighter in volume, but we can talk that in a little bit. Win big or lose big on earnings. RH and Adobe. Oracle. Information yesterday that they didn't have 3 days ago. We got a lot to talk about that. Tommy Lackey Jr., 8:35, wrapping up the week on PreMarket Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, good morning, traders and investors. Started the day out in the green by 10 handles at 56.12 and a quarter, ending last Friday under 54.20. Let's take a look at the buck. The buck is down 28 cents. That's at 101.73. And just want to bring up a sneaky little chart here. Throw this one in. Yen back at the high of the move, but market doesn't care. TLT up 23 cents. Big week next week with the Fed meeting. Crude, it had to get back to 70, right? Up 79 cents at 69.75. Gold breaking out. Up 13.70, 25.95. Silver finally playing some catch up. Up 28 cents at 30.38. And Bitcoin in a little bit of a slump here. Not participating in the rally, down $460. 58,120. Let's bring in Triple D and AB on this Friday. And Dennis, I'll let you take the lead today.
All right. You want me to play it out in real time how this occurred? Okay. So I had my worst trade of the year last night. Knocked about 2 to 3 days of production off of my trading account. So it was a bad one. It was a big loss. That's the biggest loss that I've had in a long time. Play it out in real time. Oracle popping after the bell, just quickly, right at 4 o'clock, pops. And I'm like looking at it, and they reported already. So this is going through my head. So I'm like, it's safe because they've already reported. They reported 3 days ago. So it starts popping up $1.50, and it's trading like right at 4 o'clock. Like it's not at 4:05 or 4:07. It's right at 4 o'clock, and I'm like, some algo screwed up. You know, I've got in my head the way it's trading that some algo just messed up with the timing. Doesn't think the stock's closed. So I short it, and then I'm like, it keeps going. I'm like, well, there's news. I'm like, what's the news?
Upgrade.
I'm like,
upgrade.
What's the news?
Upgrade.
I'm like, even if it's upgrade, it's up like $4 by this time. Like this is 2 minutes later. I'm like, even if it's upgrade, it's not worth it. It's already reported, so it can't be guidance or anything because it already reported. I have this all in my head. And then, you know, I'm like, what's the news? And then finally get the news because it's hard to just, it wasn't a press release. It wasn't anything like that. It was commentary at a conference. And they gave long-term guidance. They couldn't do that 3 days ago when the thing reported.
I saw that. Instantly thought that.
So that's where I'm just hammered because I had in my head there's no way it can be guidance because they just reported 3 days ago and they already gave guidance. No, we're going to give guidance 5 years from now. 5 years from now, because we have a crystal ball at Oracle and we just know exactly what's going to happen 5 years from now. So they said revenue is going to go up $1 billion in 2026 and then 2029 going to continue to increase higher. So flabbergasted as I am, I eat the loss because I'm like, once I heard its guidance, I was like, are you kidding me? Okay, now I got to try to get out of this. So I ended up covering at 169.5. I put the thing on at like 162.5 short. So this crashed. Lose 7 points on stock like Oracle. There's no recovery from that. You move on. But, you know, some things to be learned from this. One is companies apparently can report guidance 3 days after they just reported guidance. That's the first time I've ever seen that in my 24-year trading career. First time ever. Second is you've got to know who's talking at what conferences. So I'm going to ask the chat here today. It's difficult to put these lists together. Benzinga tries to do it. We all try to do it, but there's lots of commentary at different conferences all the time. I did not know Oracle was speaking. That's on me. I don't know if other people knew they were speaking. but that's where do you go? So I'm asking the chat today because we can
Could
learn
be
all this stuff together.
possible.
Again, Benzinga tries to put some lists together, but companies are speaking all over the place, so we miss. Is there any other place that anybody looks, follows on Twitter to see who is speaking this week? It's very
Usually
common.
that's more
Biotech.
relevant with drug companies, right?
Yes.
When drug
Yes.
companies, when the
Very common.
JP Morgan Health Conference, or all these other things that are going, and PDUFA dates, and someone says something at a conference. But I mean, I think it's finding a needle in a haystack. I mean, are
You
you going
got
to
to
know
go
where?
through every like someone was saying it was on their website. So I've got to go through I trade 3,000 companies. I'm not going to go through 3,000 companies every day. So what I'm asking is anybody compile a master list? And Benzinga, maybe we can work on this too. AB, maybe we can tell the pro team to try to get like a master list of every company that's talking this week. It would be somebody's full-time job. Like it'd be a full-time job almost to do that. But and again, I know Benzinga tries to do some of this. So this is just, different ideas. We're all trying to learn together. When you lose money, you try to figure out one, why. I know why. But two, what can you do better? So what I need to do better is have the full master list of every company that is talking anywhere. That's going to be hard to do. But if you've got a master list, chat, I'd like to know if you know there's a Twitter follower that really puts a lot of this stuff together. Send me their tweet right now. You can tweet at me, or you can just put it in the chat. I'll read the chat here this morning, obviously, which I always do. AB, do you know anyone master list or anything like this?
No, I just Googled executives speaking like this week, or CEO. Let me try some other Google searches, see if anything pops up. CEOs.
It's a really tough one because the 3,000 companies to know where they're all speaking every week.
I think we can narrow it down a little bit, Dennis. And I think it's Red Bull Max put it in here, and he said Oracle Investors Day after their site. So maybe just to start it and make it a little bit smaller a project. Don't they do the Investors Day a couple days after earnings? Is that a norm?
No.
Or no?
I don't think so.
They just
I
do
don't
them whatever the
think
hell
so.
they want.
Yeah,
well, Dennis,
I think sometimes they don't even do investors days right after earnings.
Dennis,
Like I've never seen a company. I've never seen it. I've been trading professionally for 25 years now, over 25. Oh my gosh, I'm getting old. But I started with Bright in May of 1999. So I've been trading full time for 25 years. I've never seen a company raise guidance 3 days after
3 days. That's a
guidance.
fix.
3 days after raising guidance. I've never seen that before. I've never seen that before. And if somebody else has seen that, let me know. But company raised guidance 3 days ago, and then 3 days later raises guidance on different years. I've never seen that before. So that's where I was really hurt, because I already had in my head that it couldn't be a guidance raise because they raised guidance 3 days ago. I didn't know they were going to raise guidance again. So that's, just ridiculous that they did that. But that's, I can't blame the company. They're just talking. So I've got to know where they're speaking. So that's where the fallout fell apart.
Well,
is not knowing that Oracle was speaking yesterday at 4 o'clock. I'm going to drop news at 4 p.m. right on the button.
And Dennis,
Crazy.
you covered the gist, but the specific Oracle sees at least $104 billion of revenue for fiscal year 2029. So they're talking about 5 years down the road here, $104 billion of revenue. I mean, I feel like a lot of companies could look out and say, yeah, we're going to try to do X amount of revenue 5 years from now. Yeah. And the market may be like, okay, that's cool. But to rip up another, $10 after it's already moved higher after the earnings, that is, even if you would have known that was why it was moving, I still might have gone short it after that, because I mean, this is too much. So
this was my train of thought. This was exactly my train of thought, AB. You just read my mind. When I was in the trade, I heard it was like 166. And then I heard about $1 billion revenue raise in 2026. So 2 years from now, you think revenue is going up 2026. And then I heard about the 2029, 5 years from now. And I'm like, is this really even relevant? I'm like, who the hell knows where they're going to be 5 years from now? So it was ridiculous in the first place. So I had that going too. Anyways, you cannot mess. So there's another lesson here. Don't mess with stocks making new all-time highs, because they just go. So Oracle was closed at an all-time high. It's been going. It's been gapping and going. Blue skies, stocks can just go. So you have no business being short of stock to make a new all-time highs. So there's multiple things and multiple reasons why it's on me. It's 100% on me. But I'm just giving you my train of thought so people can learn from
very
my mistake.
helpful.
when I lose, 2 or 3 days of earnings on one trade, we're talking about making like 500 trades, a little ding, 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 and then boom, you just got run over by the bulldozer. It's got to be a learning event. You have to make it a learning event. So the 3 lessons here are: 1, don't short stocks making new all-time highs. 2, make sure you can kind of get a feel for who's speaking at which conferences, and that's something we're all going to have to work on together, which I think we can do. Maybe we can get like a master list of who's speaking this week. You don't have to go 1 week, but who is speaking at what conferences this week. If we can find that list, fantastic. And then 3rd lesson is, when you're wrong, cut those losers. I did cut. I'd be down another $2 on the trade, but I didn't get it cut fast enough, mainly because 1, I didn't know the news, and when I heard the news, I didn't think it was worth that. So wrong.
173.76 is your after hours high. If you're looking for a target on the upside, that's 2 and some bucks away. I can't even calculate what they added in market cap based on this information, but there you go. Last print 171.50. That's up 6%. One heck of a week for Oracle.
All right, let's move from one tech stock to another. Let's go to Unity, which Unity was on the rise yesterday, trading up again this morning. So Unity had this runtime fee that was very hated in the industry. They decided to finally get rid of that runtime fee, opting for traditional price increases instead. That hit the tape. I'm seated on Pro at 11:15 a.m. this morning, and then the stock just took off from there. Went from about 17.50 all the way up.
This was yesterday.
Yeah,
AB.
yesterday. Yep.
This was AB.
Yeah. I said yesterday at 11. I said at 11 a.m. it hit the tape.
Oh, okay. I thought you said this morning. Okay.
Nope.
Yep.
At 11 a.m. it hit the tape, and then the stock went up from about $17 all the way up to 20 here. So, or no, not 20, but now it's at 19.5. But it popped up yesterday, a couple bucks here. So all in all, up 10% yesterday, up another about 2.5% today, 50 cents.
Okay, so you go from my worst trade to one of my best trades.
There you go, Dennis. There you go.
There you go. Make me feel better about my life. So I heard this headline, thank Benzinga Pro here at 11:14. I immediately bought the stock because this is like the issue that this stock went from 50 to 14 on. They hated this fee. They punished the stock for this fee. That day when they came with this fee like a year and a half ago, this was a major issue. So algos were sitting there. They don't know what to do with this. This to an algorithm, this headline means absolutely nothing. But to anybody who follows the story, this headline means everything. And I'm like, oh my gosh, it's just a flat out buy. And it took a few minutes. Like it did not go instantaneously again because the algorithms are trading that thing and they're like, well, we don't know what the hell that even means. Like they don't know what that means. And it sat there for like 10 minutes. And I'm like, are you kidding me right now? Like, is this not going to go on this headline? And then finally it starts to just slowly climb up. And then by the end of the day, it's up significantly. So I bought the stock at 17.20, right about when that headline broke. And it literally sat there for a good 10 minutes afterwards. And I'm like, am I wrong? I'm like, I don't even know. So I bought stock anyways. Still in it. I put it in the long-term portfolio actually because even at the time I went into the long-term portfolio. I traded it too, but I went into the long-term portfolio and I'm like, I'm buying this in the long-term portfolio right now because 1, the technicals look pretty good actually, and 2, this is the best headline the company can get.
Mm-hmm.
So it was like ducks are in a row. I'm like, this is a slam. I felt like it was a slam dunk. So I picked it up at 17.20. And I'm still holding it. It's up 19.41. I'm holding on to this one in the long-term account. I've sold the trade portion of it though.
It's nice that it's not a gap and go situation. Also the technicians, maybe they didn't buy it at under $18, but $18. Someone mentioned this earlier in the week, I believe. Broke above 18. Blue skies here above. Well, got some stock to chew through here. If you're looking for a shorter term target today, you did get an after hours pop. Is this 20? Boom. Did I see it? Yeah, this is 1950 on this bar. I don't know why. No, 1981. That is what
that was
you
right
got
after. That was on some algo. I watched that algo rip it up. Yeah, and I was actually ticked off myself because I was still on the trade portion of the trade at that point. It was after hours. And it ripped it up a bucket. I was like, was it more news? And then it came right back down. I was like, oh, I should have got out on that, like on my trade portion of it. Again, the long-term investment. I don't know if you're chasing it here, Unity. Maybe it comes in a little bit, but that headline's good, man.
Let's see. There's a pair of highs. I mean, there's some highs in the 19 handle, but really, I mean, this is news and you're getting some momentum. Also, you got some good volume yesterday. Really good, almost triple the volume from the previous day. So there's some believers here. Perhaps just set it and forget it, like Dennis said in the long-term account. If you absolutely have to have a target for day, if you have some weekly options or something, maybe look at the average daily range in this, and I think 50. I don't know. It doesn't look like it's much over 50 cents. So keep an eye on it. Unity, nice move. I thought they had already resolved that, but I guess it was not official until they put that headline out.
Yeah, they had talked about this, Joel, and they had never officially scrapped it. So this
It's
is the
so
official
funny.
scrap
When
of
did
it.
they do it? When did they do it? Was it like it was recently?
Year and a half ago, I'm guessing.
I think it was.
I was long the stock when they did it, and it was a main reason, one of the main reasons that but it sold off so significantly, it gapped down, and then it came back afterwards. So if you go to like the monthlies, I'm guessing
it's this.
I'm guessing
here.
in like mid 2023, like a year, like I'm guessing in there
it
somewhere,
wasn't
maybe
farther.
early 2023.
I bet
Chat
you
might
check.
know. Some people follow the story.
Oh, I bet. Yeah, I bet this is mid 23 is when. Wow, it's so funny. And also, just keep in mind, folks. Yes, they made the move. Yes, the street hated it. When is it going to be reflected in the earnings? This is going to be next quarter. It's going to be the quarter after. Got the news, got the hype, follow the momentum, but nice move at Unity. Dennis,
right.
another thing you were talking.
One question, just back to the chat, 'cause they're still talking
Sure,
about the
sorry.
conferences. Did anybody in the chat, be honest, did anybody know that Oracle was speaking at 4:00 yesterday? Because I did not. Did anybody? And if you did, where did you get that information? That's what
Yes.
I'll just leave it at that.
Dun dun dun.
So we'll leave it at that.
Dun.
One
Probably,
thing
I see a lot of people talking about, or I was just going to say, I see a lot of people talking about ChatGPT for this. The problem is ChatGPT doesn't use real-time data. Like, it's not going to get updated lists of who's speaking next week or the week after that. It might have some more historical stuff. But I don't think ChatGPT would be able to do that, at least right now.
I don't think so either. It'd be nice, but
It'd be
I'm
nice.
sure
Maybe someday it'll be able to.
Most people saying or with me in the chat, no, nobody, not one person so far. Somebody
Red
said
Bull Max
CNBC mentioned it. CNBC mentioned it 20 minutes after the news broke. I kept waiting. I actually covered at 169 because like, well, when they mentioned this on CNBC, you know it's going to go up further. And they mentioned like 20 minutes after, oh, by the way, it's like it broke to 4:00. They come at like 4:25. And they're like, well, we got breaking news on Oracle 25 minutes later. And then it gets another $2 pop off CNBC because everybody's like, oh my goodness, we didn't know this because it hits the masses, right? So you can see another pop there afterwards. But
I will say, I will say I did know that Jensen Huang was speaking the other day.
Yeah, we all knew that.
That's because everyone was
video very closely.
That's because everyone was talking
knows
about that.
when Jensen Huang's going to speak. They don't always know when Oracle's going to speak. I don't even know if it was Ellison that was speaking. I'm not even sure who it was. It was a company executive or what it was. But anyways, either way, but one thing we can learn from both of these trades, Oracle and Unity, which I clearly say, is headlines move stocks. These are both headline trades. You can say, oh, the technicals look good and Unity was going to go up anyways. Now, the technicals did look good. I agree with you on the technicals, but it didn't go up because of the technicals. It went up because of the headline. And Oracle went up last night. You can say, oh, the technicals look good. It was going to break out to 171 anyways. It went up because of the headline, folks. You're just kidding yourself if you didn't. Both these stocks were headline trades. Headlines move stocks. If you don't have the headline, don't trade it.
All right, let's move on to some earnings stocks. Let's start with the bad, then we'll get to the good.
Okay.
Adobe reported yesterday after the close. EPS came in at $4.65, beat the $4.53 estimate. Sales came in at $5.4 billion, beat the $5.37 billion estimate. They see Q4 revenue, so guidance for Q4 came in at $5.5 to $5.55 billion. Non-GAAP EPS of 4.63 to 4.68. So either way, the soft guidance here, they double beat on both EPS and sales, but then that guidance brought the stock lower. I think this is what happens when people kind of peg you as an AI trade, and then you're not really seeing a lot of the AI revenue start increasing because there's really only a select few companies, NVIDIA and a few others that are currently seeing earnings increase because of AI demand. And I don't know how much Adobe is right at this moment. So either way, Adobe stock trading down about 48.5 bucks here, 8.27%. So Adobe here. Not a great, well, a decent report, not great guidance, stock down.
One of those curveballs in the middle. Like, you got market want to buy this, but like you were saying, is Adobe really the huge AI play, or is it just piggybacking off of, the AI? It's not like number one on my radar, and it's not even the top 10 or top 20 probably for like, oh yeah, this is going to be the storied stock. Stock's still off all-time highs, comes down, and the trading here kind of feels like it's in the middle of nowhere. So I'm going to take a pass.
Just based, you'd had to be cat quick to get this. You came down to an area where you did have 3 lows in the same area. Those lows piggybacked the 5. I'll just put the middle of it. I'll call the middle of it like 526. I see 3 lows between 25.77 and 28.02. So right there. That was nice. You would have just have to been sitting out there like a sitting duck to get that. Whoever bought it on that dip there, they're parceling it out at 540 here. So the fact that we're major gap lower, technicals, the low was coinciding with 3 other daily lows, which may be good for today. Resistance, that's minor resistance at 540. It takes that out. We got a long ways to go to fill that gap. That'd be way up at 573. Don't see that happening today in Adobe.
Yeah, and like I mentioned, or Dennis, you said you don't know if Adobe really is this AI play. I think there's this bucket of companies that are set to benefit from AI over time, but they're not necessarily seeing their earnings increase right this moment because of AI. So
I think that's good synopsis. Yeah.
Yeah, it can be tricky to kind of try to find. Tommy Lackey in the chat, who we will talk to soon, pointed out in this ETF, in the iShares Expanded Tech Software ETF, ticker IGV. Adobe is the biggest holding, and Oracle's number 2. So, probably not the type of.
It's flat right now.
Yeah, probably. Yeah, one's up 8%, the other's down 8%. This is probably not the type of fund that produces the ETF effect that we talk about, but it is an ETF effect that we're seeing here this morning with one stock up 8%, one stock down 8%.
This is just the way this market seems to work here, where it's like, soon, even though they're nothing to each other, they like to balance it out. So if one stock's going up huge, another stock's going down huge. RH is data report, I guess, and stocks up 18%. These moves, man. It's another thing about this market. And I've been talking to a lot of professional traders. I had another friend message me and saying, it's been tough lately. And you know what it is? It has been tough lately because there's been a lot of chop. The last 2 or 3 months been tough for me too. Like, I'm still making money, but I'm fighting. And you're getting some bad beats, like, that Oracle trade last night where they come out of nowhere. And when stocks just get going in one direction, you remember who was it from T3 that was on there saying it's like the algos can't stop pressing the buy button, then they can't stop pressing the sell button. It's like we're so algorithmic driven that these moves are just crazy moves sometimes. And once they get going in one direction, they just don't stop. Because you look at this RH report here, and, it's a good report. Sure, this company's been in the gutter, but is it really, a 20% report? The revenue beat by what? Not even 1%. Not even a 1% revenue beat. The earnings were good, $1.69 versus $1.56. And the revenue growth is decent. So revenue growth 5 to 7%. That sounds fine. It sounds like they were fine. Up 19%. These moves on,
I think it was just a low,
just whatever.
Wow.
Low bar. RH.
I think so. Low bar too.
Had been a disaster after its past couple of earnings reports, like you mentioned. So I'll just give the exact numbers. EPS came in at $1.69, beat the $1.56 estimate. Sales came in at $829.65 million, beat the $824.5 million. Like you mentioned, Dennis, adjust Q3 revenue growth to a range of 7 to 9%. For the fiscal year 2024, revenue growth to a range of 5 to 7%. So decent there. It's also got it depends on how you want to look at it. Forward PE was down at 30, but the price to sales got below 2 to 1.7. So this thing did get kind of cheap when RH has historically always traded at a premium. So coming in after a few bad reports with a good report, stock up, about 20% at this point. But I'm with you, Dennis. I would not be going out chasing it here. You've already seen it sell off a little bit because it went up to 330, almost 314, and is now back down.
Yeah, it did. It got to 3. Yeah, I would say that that pre-market high 314.49. I'm not going to make any long-term bets on that not being the high of the day. This area of interest right here to me is this 306 area, 305, 306. You had 3 highs here, and then before you fell off a cliff in April, you had a high in that area as well. So you're above it for right now. If you're buying this thing, if you love buying stocks up $50, you want follow through, make sure you take out that pre-market high. And then the next daily high, if you're really looking for more, is 328. I just want to point out that the street was really leaning the right way into this report. I don't know if it's the short interest or whatever, but and it was also a good day in the market. But what's interesting to me is the stock gained $9.50 ahead of its report. But that's significant. But what's more significant is this had its biggest volume day. It traded 2 days ago. It traded 650 grand. Yesterday, it traded 2.2 million, and it has not traded over 1 million shares since July 11th. Street leading the right way into this report. Let's see if those short-term buyers take some huge profits in RH.
It's just the market of crazy moves. And this is why I just posted in the chat. It's like individual stocks and even the market overall. Like just think about that S&P move 2 days ago. I mean, from being down 1.5% to being up 1.5%, basically in the same day. I mean, I don't know if I've ever seen that before either. It's like the moves. The moves are just crazy. And if you're caught on the wrong side, you can really get hurt very, very quickly too, Joel. And if you're on the right side, you're like, wow, this is awesome. I mean, even the Unity move yesterday. Oh, wait, that's a great headline. And then, this stock goes from 1720 to 1950 yesterday. You're talking about a stock, that had like a 15% intraday move on that. Maybe that one was deserved because it was a really good headline. But, the Oracle move last night, the SPY move 2 days ago, these earnings moves are very vicious as well in both directions, folks. And then just look at what the Elf Beauty, we were talking about that one, the relentless seller, which it looks like it's, full disclosure, I actually did, I've got a little trade on, which I'm going to get out at the open long. But, just this thing, just going from 200 to 100, basically in a heartbeat. Celsius, the same thing. I mean, it's like, again, the algos just like get on one side and they can't stop selling. They get on the other side and they can't stop buying. And we keep continuing to become more and more algorithmic, this trading. And it really equals some violent moves.
It does. It does. And it doesn't move the VIX. I just want to say AAP. Remember I said that's the most bullish chart I ever looked at 2 days ago? 2-day rally. Look at that.
They're starting to go and find the trash. And I think we're at a point where you can start bottom picking. Short term for trading aspects, like a Lululemon here. That's what
I was gonna bring. That's what I was gonna bring up next after RH. I was gonna say, what about another beaten down retailer that's been perking up here? Lululemon. And full disclosure, I put a long trade on Lululemon yesterday.
Nice.
And part of my hunch is that this is not anything substantial. I just have a hunch that I would not be surprised if in the next couple of weeks we get like a headline that some fund is coming in here and taking a stab at it, or potentially an activist, which we have talked about, that Lulu could be ripe for an activist investor coming in to try to shake some things up. But like looking back at let's see, on August, I guess that was the day that on the yen carry trade, August 5th, this thing got down to 220. But like I think there's a decent chance that was the bottom, 220, and that we're seeing this thing. I mean, it's back up.
I think so too.
260 now.
I think so too. I think there's a play to go bottom fishing in a whole pile of stocks here right now. And again, you got to have a tight leash, because we know stocks that are trending down tend to get a headline or a downgrade or something bad happens that knocks them back down, which we're going to get to with the headline risk with Boeing here in a second here. But
yeah,
have your list.
We do, Dennis.
Yeah.
Tommy, can you hear me? Tommy Lackey's been patiently. He joined us really early here.
We want to bring
he can hear
Tommy in
us.
before having the
Patient-
conversation. We can bring
Yeah,
Tommy in.
and I mean it's always good to get another opinion on and stuff. So
Yeah,
I
bring
want
Tommy in.
All right,
Yeah,
we're
bring-
gonna and we're
Tommy,
gonna,
can you hear me?
yeah, he typed in the comments. He
Yes,
can hear us.
He's got us.
We're going to debut something new today with our guests. So excited about that. We'll bring on Tommy Lackey when we come back. All right, Tommy Lackey, how are you doing this morning on Pre-Market Prep? The first ever guest with this new layout. This is not official. This is not something we're going to for sure stick with. So let us know in the chat what you think. We were trying to toy with something that, because the way we had it before, where everyone was on the left, the person on the bottom would sometimes be cut off by the banner on the bottom. So now the screen's a little bit smaller for all of us. So
Nice.
let us know in the chat what you think. Sorry, Tommy, how are you doing this morning? Uh-oh.
No, you can hear us, but we can't hear him. He's just on mute. Just hit the mute.
Let's try that again.
There you
Oh,
are. Boom.
Now you sound so crisp. You sound perfect. How are you doing on this beautiful Friday morning?
I'm doing great. I'm doing great. I like the new layout, other than I'm kind of big compared to the charts. I'm more about bigger charts and smaller me.
You don't like seeing yourself big as this Tommy
No.
Lackey.
No one ever comes to look at me, I promise. So hopefully they come for more information than that.
We're voting down the layout, maybe.
So
I kind of like it. I think it's
I don't know
more
about the smaller
symmetrical.
charts. He makes a good point. The charts are smaller though.
All right, well, we'll try to make us a little bit smaller, charts a little bit bigger. But Tommy, we've just been talking about some of these stocks that have been making big moves, both to the upside and the downside. I mean, what's been sticking out to you the past couple weeks?
Well, I think it goes back from the past couple of weeks just to further on to the past couple of years of what I've talked to y'all about a lot, which is velocity. Velocity in these markets have changed since 2018. I can't remember if that was the Volmageddon or if that was 19, but right in those two areas where they got those two big drawdowns that we immediately V'd out of. Velocity's just really changed in the markets all around. Now, that doesn't really necessarily explain the last couple weeks, other than I think you just have a lot more hit and run. And that's been going on for decades, to where the average holding time of a stock has decreased so much, just because, as you say, there's algos, but I don't think it's just algos. I think it's just access and the ability to, hit that button whenever you want. And that's good for some. It's good for some. It's bad for others. Again, my mantra with all of my clients is I don't know if I'm any better than anybody else, but one thing I do know I do is I pay attention a lot more. So when you pay attention more, you can get better idea of what's going on and get more of a general view. And that kind of helps. This last couple of weeks, that was a huge part, because not to say I wasn't nervous, but at the same time, I didn't dump my whole portfolio because of what we saw the last couple of days. And I heard a lot of people talking about this was the end until October was over. And then all of a sudden we have 4 straight up days.
Yeah, quickly.
Markets don't like to appease. And we're kind of in that situation to where, everybody's talked so much about the negative seasonality of September. I'm beginning to wonder. And it actually would become a huge, monstrous message if we had a very strong end of September with the seasonality supposedly being so negative. That would be something we'd need to step back and look at from a larger view.
Tommy, can we take one step back here? We're going to go into individual issues in a
Absolutely.
second. But I mean, I don't like to keep, I do like to keep bringing it up. You talked about the recession. We've talked about this. It's something that's been a big driver in the market for a while. And you were reasonably confident that it was just going to get pushed out a little bit. And the indicators, now they're talking about quarter. Maybe we have to go a half. Some people were screaming for an emergency rate cut. Where are you on the recession looming question here, that sometimes this is in focus in the markets and then sometimes we just kind of brush it under the table?
Yeah, I think the hard part for people right now is the recession discussion and the interest rate discussion need to be separated. They aren't one and the same. Okay, because the interest rate situation and a lot of the inflation situation that we had was purely fiscal from the government side and all the money they threw out there, and supply chain. Well, that's not necessarily something that derails an economy. The Fed has been doing everything they can do to derail the economy so that they could slow things down with interest rates. And guess what? It hadn't worked. So I'm not necessarily looking for a recession right away. I still think things are moving well enough that you can continue to push it out some. Do I know if we're going to stay in a high growth or not? I don't know. But I will tell you one thing that I think I mentioned briefly last time, and I'm getting more and more convinced of, is that I believe that people would be very smart to step back and pay a little more attention to where the demographics are right now, generationally. Because that's one thing. Chris Cavaccio of Cavaccio Capital, I don't know if y'all are familiar with Chris. He put out a video last year on demographics. Excuse me, on demographics, and it made a lot of sense to me that we might be going into another demographic boom, kind of like the baby boomers here over the next decade or so. So a lot of this little back and forth talk we have right now, if that's true, isn't going to matter. And so we're just going to be, for short-term traders, great. For longer-term people and mid-term people, you're going to have a little more flexibility and a little more of a, whether it be a Fed put or a demographic put there. And I think one of the best examples I have of why I'm pretty convinced that might be the case is the fact that during these interest rates, the velocity that caused them and everything else, housing continued to boom. And you've got the millennial generation just entering that portion of their life cycle. And again, like it or not, the pig and the python theory of wherever the largest generation moves through the economy, that part of the economy booms. If you couple that with the level of innovation we have now with AI, kind of like with the internet and the computer back with the baby boomers, you're really in a situation to where this could be a much larger move. And if you pull up a large monthly S&P chart and look back from like the mid 80s into the 2000 crash, that's hundreds and hundreds of percent of gains. People just kind of didn't feel it while they were going through it, but then looked back and all of a sudden they were up huge. That's what demographics can do to a market. And I think we might be on the cusp of some of that. I think Chris has done great work in that. But where we are right now here today at this moment, I think it's kind of that same thing as, again, everybody's expecting this economy to roll over, the markets to roll over, those things to roll over. But if you have a generational spending shift, that's going to all be muted. It'll still happen. We'll still have small ones, but don't forget, we've already had 3 bear markets in the last 4 years.
So
Start looking at 20% moves, if that's how you want to define it, which I don't.
And we just got out of one for most of the techs. I mean, the semis are down
Correct.
22% from the high. So people calling for a bear market, you got it in select pockets of this market here. Like the SMH went from 280 to 200. That's not nothing, Tommy. That's a fairly significant sell-off.
Exactly. And that's why I don't like the 20% threshold, because it makes every bit of logical sense for something like semiconductors to correct, not bear market, to correct 20% or more after the run they had. So these numbers you put on it versus looking at where it is in the grand scheme of things of the chart doesn't make sense to me. I'm more about how does my structure still look versus how far am I down? Because if I just ran 100 and something percent, 20% ain't that big a deal. That's a Fibonacci. You're in those ranges. I'd rather use that than a raw number. So when you look at something like semiconductors, you're exactly right. And that goes back to, again, I put out a chart, I think yesterday or the day before, of NVIDIA. And it's got a really beautiful inverse head and shoulders sitting right there about the time everybody's telling me it's going to break down.
I think you're looking at the top right chart, maybe, for the inverse head and shoulders. Can you make that bigger, Joel, so everybody can see? Yeah, there you go.
And this is the one case where, everybody loves to look at the chart now, but they don't look at the volume. This is the one case you can look down there at the bottom at the volume on that inverse head and shoulders, and it's literally classic as it can be. It's higher on the first one. It's a little bit lower on the second down. The third down, it's even lower. On each up, it gets slightly bigger. I mean, it's a classic pattern. It's just not flat. And again, the velocity we have in these markets these days, you got to deal with that. But I also have to be realistic and say it has been a very difficult market, Dennis, even with the stocks that are great, great stocks. And that's what happens, though. again, that's the, I put out that tweet yesterday from Brian Shannon's statement, where he always has his quote is, if they don't wear you out or they don't scare you out, they wear you out.
Yeah.
Well, I made the comment that right now we're kind of having both.
Yeah. I mean,
it's
just the violent reversals and violent reversals out of nowhere. I mean, this is really what makes markets difficult. When you get an S&P that looks like it's falling out of bed 2 days ago, down 1.5%, and closes up 1.5%, I mean, a 3% intraday reversal. These are violent, and it catches day traders on the wrong side, and it catches a lot of traders on the wrong side. It's kind of like the last couple of months, it felt like a random walk. You remember the random walk theory from, like corporate finance, where they talk about, that stocks, just walk in a random and you can't predict it. I mean, that's kind of what it feels like the last 2 months. It's been kind of a random walk for a lot of stocks.
Well, I think so, because I think you have uncertainty on all sides. I don't think there's any group right now that's like, oh yeah, I'm very certain what's going to happen. I sit in here and I believe we are in a bigger and a longer term bull market because of what you just said. We just came at it with technology, and even during that, technology's earnings did not really get hurt much. They continued to chug along just like they have. And again, I hear a lot of people talking about moving to value right now. Well, guess what happens when you correct? You move from growth to value. So if we've corrected for the last 2 months, all this move into real estate and these things and all that is just a logical progression. We'll have to see if you start getting flow back into tech and communications and some of those, how that does play out. But we're in a scenario to where if this is a true larger uptrend, which again, that's where I am in my scenario right now, then you will see, it rising all boats. Now you have to move to relative moves and figure out, okay, if I'm going to outperform, who's moving the best when everybody's moving.
So, Tommy, you mentioned that there's uncertainty kind of here from all sides. You also mentioned, the interest rates. Right now, speaking of uncertainty, we're seeing on the CME watch tool, yet it looked like it was a certainty we were going to get 25 basis points. Now it's showing almost 50-50, 57% chance we're going to get 25, 43% chance we're going to get 50. A lot of people are saying we don't actually want 50. Where do you stand? And are there certain sectors that you expect to heat up or not do well if we do get 50 versus 25? What's your outlook for the difference of the cut? And here we're only now a few trading days away from this. Is coming next Wednesday, the interest rate decision.
I am definitely, again, I'm going to talk about someone else. Good follow on Twitter is Renmac, Jeff DeGraff. Yep. His group, they do a lot of good economic. I don't do economic stuff, so I have to find people who can do good economic stuff, and they do it. And they talk about the Fed being way behind, and we should have 50. People are scared of 50 because they believe that's going to make everybody think that the recession is already here, and we're much worse off than we are. Again, we need to separate those two for now. Putting those two, the recession and the interest rate cut things in the same bucket, are not the correct move right now. And that's causing a lot of confusion. Now, what areas are going to work better versus worse? Well, again, you have interest rate sensitive areas out there. Absolutely. You have things to where it might still help utilities. One of the reasons interest rates help utilities, not only do they pay dividends, they often have very high debt levels. So the interest rates help them as well. You're also in a situation where biotechs tend to be helped by interest rate sensitive. A lot of smaller caps you can say because you're higher debt oriented scenarios. So it's that shift that has the potential. Now, I will say that I'm getting less because I've been a big proponent of small caps for too long, feeling like that the variations and just the mean reversion of it should happen. More in my mental set as I try to figure out why it's not happening. It really, I think, has a lot to do with the small caps just do not have any focus anymore because of the fact that most strong companies are coming out public at 30, 40, 50 billion, and they never hit the small cap arena. And so it's kind of hard to have a index that shows the growth like everything else when every single IPO bypasses it. So I think that may be one of the theories as to where small caps continue to underperform is it's companies that are just stuck there, not necessarily companies that are new up and comers as they used to be in past decades. But at the same time, you still have a general interest rate sensitive area, that those are definitely the companies that tend to be higher debt level, tend to have higher issues there, and are be coming out. And I still love looking through them and standing through them, because you can find just some phenomenal charts down there with companies that have good earnings and all of that. And if interest rates are lowering, that puts them in a position to really make some strong moves. And we're seeing some of them.
Yeah, there was, I believe it was David Einhorn was on CNBC a few months ago talking about, he was saying the market is fundamentally broken. And one of the issues that he brought up was, to your point, that these like smaller companies aren't IPOing as much. And he outlined a few different reasons for that. But I mean, you're talking about Red Mac on Twitter, which I also follow. Great follow there. But a lot of
what was that name again?
It's Renaissance Macro, but it's just Red Mac for short. And they go on different podcasts and stuff. So they're a good group. But the 50 basis points cuts, a lot of people have been saying like, oh, here's the data. If we get 50 basis points, it's actually not good, because that usually means the economy is weakening. Well, what if we get 50 basis points in a strong economy? Like, I don't know why people have been talking about the 50 basis points as if it's this like, as if it's this boogeyman, because it doesn't change the actual economic conditions that we're in right now, which for, what we can see, maybe not perfect or as great as they were 6 months ago, but are still pretty good. So, if looking at it in the past few times we've gotten 50 basis points, which was right after, or the past few times we've gotten the first cut after a hiking cycle be 50 basis points, was after 2007 and after the dot-com bubble crash. This isn't the same market as those. So if we get it now, I think it'd be a different reaction than when we got them back then. And when we have Blue Putnam on and other economists, Blue has talked about that the federal funds rate should be, slightly higher than or about 1% higher than the inflation rate. So if the inflation rate is at about 2.5 or 2.8% right now, then the federal fund rate should be at 3.8%. So the 50 basis point would fit into that camp as well. So like, I don't know again why everyone's freaking out about if we do get 50 basis points.
And again, there's an even more important point that if you're going to go back and look at any long-term or study history, market history, long-term, and you look at bonds. Now, again, the indexes aren't that good and all that when you go back past World War II, before that. But when really you look at it and you get prior to World War II, where we funded so much debt for that, average interest rates going back even into the 1800s, it just literally fluctuated between about 3.5% and 4.25%. So the idea of us thinking that 4.5%, 5%, or whatever isn't in any way normal, it's not. Neither was 0, but 3 to 4% is a pretty normal interest rate across the board for long term. We've just had some pretty magnitude or velocity based or interruptions to that in our last 50 years. And that has to do, again, with all the debt and everything else, which, again, it's a fiscal problem. Inflation is a fiscal problem. Our government needs to stop throwing money out the door.
All right, what about
just before we let you go, going up against the clock, any what's hot, what's not? Is there anything that you want to, any issues and or sectors that you want to bring up before we wrap things up here on this Friday?
Yeah, I mean, I think as far as issues and sectors, I think we'd obviously still have the seasonalities we got to pay attention to. But I think what I said in the beginning, I think we really need to think about is that if we do, I don't know if we will, but if the seasonality does not kick in here soon and we start heading back down into that, that is something we should take note of. And that should tell us a lot about what's underlying this market and its strength, not weakness. We had every opportunity to break down this last week or so, and we did not. Buyers came in where they needed to right about the time I started hearing everybody get really loud about the fact that it was over and how bad the recession was going to be and all that. And we haven't even stepped off the first step yet.
Well, there you have it. We've been on the line with Tommy Lackey. Always a pleasure to have you on, Tommy. He's at power-investing.com. Tommy, any final words you want to leave us with?
No, I just say, basically the biggest thing here is risk management and position sizing with this volatility. And that's what's going to allow you to survive through it. If you want longer term, just make it a little looser and a little smaller.
Beautiful. All right. Well, Tommy Lackey, again, portfolio manager at Relativity Capital Advisors. Enjoy the rest of your Friday. Have a great weekend. We'll be calling you up soon.
Thanks, guys. Talk to y'all soon. Always appreciate it.
Thanks, Tommy.
All right, time for a quick market update, Joel.
Well, we dipped off that import-export data ever so slightly. Went down to mid-range on the session. Now we're back up 9.25 handles. So not an extreme dip, but buy the dippers out there on that import-export data.
So the other big headline of the day, and the chat does want to talk about it, is Boeing, the stock that cannot get away from negative headlines. We've talked about this for the last little while and saying every time it starts to perk up, there's another negative headline that hits it. Well, this one was rumored yesterday. They shrugged off the rumors because the stock actually closed higher, and now it looks like it's official. We got a strike at Boeing.
Yeah, I mean, we talked about this the other day when we got the the headline that Boeing was avoiding the strike, that give it a day or two, and that the bad headlines will come. I didn't know the bad headline would be the same exact thing as the good headline, just opposite. But yeah, the workers rejected the proposed labor contract with the company, leading to a strike here. So, and I mean, God, this guy, I almost feel bad. I mean, it's hard to feel bad because I don't know how much he's getting paid. I assume, probably $20 million plus a year. But this new CEO, Kelly Ortberg, he is just walking into an absolute dumpster fire here. I don't even know what you do if you're him as that new CEO. But you come in day one, or not day one, but essentially day one, your workers go on strike. People don't want to buy your planes. There's production delays. Things are falling off the planes. I mean, he's probably already aged 5 years in a month here at Boeing.
Just everything just goes wrong at this company. And again, you got to give the new CEO some time here, but holy mackerel, you're right. Just coming into the worst possible situation. And now they're officially on strike. They want a 40% raise. I mean, company's got all kinds of problems. Debt's going up there. Like, they got issues, and the people don't care. They're making the planes. They don't want 25% more. They want 40% more. So, I mean, I don't know. It's a tough situation. Like, look at UPS, ended up giving them 40% more, and the stock just goes down every day since then. So, I mean, some of these companies that are not firing on all cylinders, and Boeing definitely not firing all cylinders, are getting squeezed on the other end too, where their unionized labor wants to be paid. Tough situation for Boeing.
Well, there might be fires in all of their cylinders, and
yeah, that's what I'm saying. There's bad rumors here.
Yeah,
Joel, technicals, is there any reason to think that this, like, obviously when a strike gets settled, the stocks almost always pop, but they just went on strike last night at midnight. So we're only 8 hours into this strike. So it's pretty early to be like playing it for a pre-strike or a settlement pop here. I mean, could this end up getting uglier here? What are the technicals?
Oh my gosh. I mean, I've been trying to be hands off on this thing for years here. Ever since we had George Slezak on. Remember that, Dennis, back in 2017? I mean, you could try and buy this thing. I mean, it got down to the low, 2-day low at 156.10. It took that out into pre-market. I mean, I would say it's probably a better area to try and cover a short today than attempt the long. I mean, it will. One thing we've learned, like when the bad news comes, and then, okay, well, they have the strike. Oh, it's settled, but then they paid up a lot, and then you don't know the reaction. I mean, this is just one stock, Dennis. You need to put a sticky on your computer. You haven't gotten caught in this one. I know you're very conservative.
I hardly trade it because of the negative headline.
Yeah.
The headline, there's 3 to 4 headlines that come out on the stock a week. It's like every other day there's a headline in Boeing. So you're just trading this, and you're like, oh, it's got a good setup, or it's got some momentum, and I'm going to buy it. And then boom, headline, bang, down $5. I mean, obviously, this is a bad one, too. I mean, you don't see strikes happening here. This is a really bad one for a company that didn't need this at this time. But it's just a company that's very difficult to trade because of the headline risk. It's like a biotech with news every other day. It's tough to trade.
You know what? The only stock that was contrarian on the union news was good old General Motors, and it's yet to be determined that stock's long-term fate. But remember when everybody was what was that strike? It was at the end of 23, right?
No, that was all of the big three. It was Ford, GM, and
Ford hasn't done much.
Ford hasn't come back. Ford's got issues, man. I don't like Ford stock.
But people at the time were
attractive, but there's just no innovation there whatsoever, and really expensive labor. Ford's tough stock.
All right, well, moving on from Boeing, another group of stocks here that seems to never be able to hold on to good news, or there's always bad news coming out, the Chinese stocks.
Yes.
And now you're seeing a lot of these Chinese retailers down this morning after the
Jeez.
Biden administration announced new plans to target Shein, Temu with new rules to curb alleged abuse of U.S. trade loophole. So essentially, these companies like Temu and Shein that sell really cheap clothes and goods to Americans get to bypass this kind of tariff rule because they're such small packages and such small amounts that people are, less than $800. But because these companies are now doing so much volume and probably taking not an insignificant amount of market share from U.S. clothes companies and retailers that now the administration is coming out and saying they're targeting that. So you're seeing PDD down, taking the biggest hit on this because that's the parent company.
For sure.
Parent company of Temu. Baba, not as much because you do have like AliExpress and stuff that Americans can buy goods off Alibaba, but that's not Alibaba's really core business. It's like Amazon at this point, where Amazon's e-commerce business is just kind of like an arm, and then they do AWS and all these other things. So Baba's only down about 1.5%, while you're seeing PDD get absolutely hammered. Then Shein was actually scheduled to IPO, and it never, I don't think it has IPO'd, and we haven't seen it. And now with this, I mean, who knows if it will. So PDD taking the biggest hit, Baba a little bit, but not as much. JD, let's see, JD down slightly, but not really in the same camp. So either way, Chinese stocks still getting more negative headlines.
It's almost just like Boeing. Like these technicals, they start to look good on the charts. They start to look like, okay, we got to move here, and maybe this is China stocks time, and then a negative headline comes out, and bang, Pinduoduo down 5.5%. I mean, this is just what these stocks do. There's just nothing. And then you've got to look at news headline anticipation. I mean, both, I don't care who the president is, if it's Harris or if it's Trump, both administrations are going to continue to crack down against China. They don't, they're looking, obviously everything gets bought over in China, and they want to crack down on it. They want things, being made and purchased in the U.S. here. So I think that, even if you're looking at headline anticipation coming, and even get an administration change, or if it stays the same, I don't think it matters. I think both administrations are on board with the same thing here, is that China e-commerce is going to be under attack. And then the Chinese government harpoons their own companies too. So, I mean, it's just difficult. Even though the valuations are so attractive on some of these companies, they just, and if you're looking at potential headlines coming, I just don't see it getting much better.
Joel, any technicals we want to discuss before we move on from China?
Oh, I was just ripping through all these. I mean, the Pinduo, boy, these are, I mean, it's down, 526. I don't know. Where's the support?
Do you buy the
Where's
dip,
the
like the
book?
lean
I
on the
don't
lows?
know.
I mean, it's hard buying dips on stuff.
There was a pair of lows at 92, your 2 and 3 day lows. Boom. And then your pre-market low is 90.28. So I would just be down $5 off this. I don't know how long I just kind of would, if I didn't cover short and I wanted to get long, when I saw this pop back up to 100, I would keep an eye on this. This might be your opportunity to catch it back down to the low of the move. But what's the headline going to be on over the weekend? Or what's the headline going to be on Monday or Tuesday? Or
the headline risk is always to the downside. It doesn't seem like these companies come out with good headlines. It's only bad. And when they do come out with good headlines, they pop for a day and then they give it back. It's been such a tough investment. And it has been a tough investment for the last year in the China stocks. It's been a tough investment for the last decade in the China stocks. And I mean, you can go out in the long-term charts and see how strong, U.S. markets have been over the course of the last 10 years. And then you bring up the FXI, and you should do it, Joel. Just bring it up just to remind everybody of what we have done here in the last 10 years. If you're playing for the catch-up trade, maybe one day it happens, but everybody's playing for the FXI catch-up trade every single year, and every single year it doesn't catch up. What's the definition of, what do they say? Now I'm losing track. I'm getting old here, but of insanity. The definition of insanity is doing the same thing again and again and expecting a different result. That's what China stocks are all about. Now I've got Baba and Baidu, and I'm like, they're cheap. The valuations are so attractive, but they're in China and they're absolutely hated.
Would you, if I force you to make a major investment, would you do it in FXI or the IWM?
If you forced me,
Yeah.
both of these, Obviously, there's been disasters, but it's probably the IWM because I don't see, maybe an administration's come out trying to help smaller companies. I don't know, but I don't see any administration coming out. On the FXI, the IWM's been okay. Like, that's a lot better
Yeah,
chart
like
over
the
the course of
monthly
the last
doesn't
10
look
years.
that bad.
It's been ugly for 4 years, but maybe, Tommy's going to be right here eventually. Maybe we will get it. Well, I don't think we're at 40% rally by the end of the year. I think he's going there, but maybe it's going to be their time eventually. Who knows? But I tell you, the time never seems to come for the China stocks. I've got some Bob and Baidu. It's a small piece of my long-term portfolio. I just can't pass on these companies at this valuation. It's so cheap. They're working on so many AI things too, but they're just absolutely hated.
All right, it is 9 a.m. I did want to discuss some AT&T today. Not for anything related to the telecommunication business from AT&T, but I don't know if you guys have been following this DirecTV Disney saga. But now Americans that pay for DirecTV do not have access to ESPN. They missed Monday Night Football this week.
Oh my gosh.
It is complete and utter. I'm not going to say the word that Dennis has said the past couple days on the show that Joel wasn't too happy about.
Yes, he has. Potty mouth Dennis.
But if Dennis wants to say
potty mouth.
If Dennis wants to say it, then he can, because that's what it is. It's complete and utter, that word, because there's no reason that any red-blooded American that's paying for DirecTV, an American cable company, should be missing out on NFL football games. All I'll have to say is they are lucky that ESPN only has one football game a week on pro football, because they have college football as well. Because if ESPN carried like all the NFL games, I have a hunch that this deal would have gotten worked out because people would not want to miss their football. But either way, DirecTV now talking about that they are seeing people leaving their service already, and this has only been going on for a week of the football season. So if this continues, I'm going to go short AT&T because, I mean, this is, it's just inexcusable that anyone, I mean, Dennis, imagine if in Canada people were paying for their cable and missing big hockey games,
like NHL Saturday night, hockey night in Canada. We can't
hockey night in Canada. Yeah. Don Cherry. Well, he's gone,
Don
right?
Cherry's been gone for a while.
Yeah, he said
can't
something.
say you people, but that's a whole another.
What happened in Uber? What happened in Uber? Dennis, what's your offers on Uber?
Let's get the headline real quick.
Whoa!
All right, but it is 9:01.
I got it. Uber and Waymo expand partnership to bring autonomous ride hailing to Austin and Ted. Oh, that's interesting. That's probably bad news for Tesla folks.
Probably bad news for Tesla. All right. Well, it is 9:02 a.m. We've gone over now. I had to get that thing on AT&T just in the off chance anyone from there is listening. We don't have live trading today. No live trading today. Just the programming notes. Sorry if anyone is really upset about that. You can blame it on me. It is my fault. Other than that, Joel, next week we'll be back.
Okay. And our guest on Monday, I just pulled it up. We're going to talk commodities. We are going to talk commodities with Greg Weldon from Weldon Online. We'll take a look at this gold market, silver picking up. Tuesday, T3 Tuesday, as always, Jim Tassoni. He's been making some darn good calls. He'll be on Wednesday. Thursday, Tim Seymour. He'll be coming on to join us. And Friday, CC Legator. And I have an apology to make to the chat and to you, Dennis, and to any investors out there. I totally forgot about the rollover. The September and the quad witch next week. Always the rollover on the Wednesday before the Friday. That's when you had your crazy action. That's when people are moving from the September to the December. They're rolling the contracts. You get funky liquidity doing that. I always mention the quad witch at least 10 days ahead of time. Folks, I'm sorry.
That's why I got killed on Oracle.
I know. That's why you got killed on Oracle, Dennis.
I should have known. It's all quad witching. That headline, those commentary wouldn't have happened if Joel would have been on top of the quad witch. I blame you for this as well, Joel.
I will send you a check. Just let me know.
I like that.
Oh, okay.
Okay. All right, AB. Thank you.
All right, guys. We will be back on Monday. Stay green. Have a great weekend. And stay safe. We'll see you guys then.